Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Let's fix that view. Oh, Dennis, what happened to your camera? We're off to the side here, but that's all right. Good morning. Oh, whoa. Good morning, everybody. Well, Dennis fixes his camera. Welcome to Pre-Market Prep. Spencer Israel, Dennis Dick, Joel Elconin will be with us in a second. Man, guys, I got to tell you, last year was so crazy that I've forgotten what it's like during the summer, and it is quiet. Let me tell you, there's Joel. It is quiet this morning. We're going to talk about the rotation into tech, away from the banks. We'll take questions from our chat. We'll follow through in Chinese stocks. A bunch of them are trading higher this morning, though DD is not so much. Two guests on the docket today. First up at 8:35, we'll be joined by David Green, the man who has been trading at the open with us for about a month or so. He will share some old floor stories with us at 8:35, and then at 9 I'll be joined by Callie Cox. She is the senior investment strategist at Ally Invest. In the meantime, go ahead and smash that like button. Joel, how are we doing this morning? It's awfully quiet out there.
No, we're up 10 handles. Another amazing correction we had in the market yesterday. We got down about 30 handles, and buy the dippers came in. Actually, you had a look at Friday's low. Globex low, 08. You hit 05 yesterday, and here we are. We're knocking on the door. One number only on the upside. We'll give that a little bit later on. Crude, wild day in crude yesterday. Up $1.13 now, but that thing had a $4 range yesterday. Got a good level to keep an eye on here in the crude market after those two volatile day and then the backup day today. Gold back over 1,800, up 1,420 at 0840. Silver back in the green. That's up 35 cents at 28.53. Bitcoin really finding a home here at around 35K, up a G at 34,985. And Ethereum, that had a pretty good day yesterday. That's up $64, 2,400 on the futures. Triple D, quiet day, summer trading. Not quite the excitement we had yesterday. We might have to make some stuff up today.
Well, not a lot of news, really, but we are in a holiday trade, so you're going to see it a bit quieter. There was a lot of rotation yesterday, and that rotation continues clearly here this morning. Amazon, mega cap benefiting from the rotation. Cyclicals, Dow components, banks not benefiting from the rotation. Commodities not benefiting from the rotation either. This morning we are seeing a little rally in gold. It was bucking the trend there yesterday to a certain extent until it turned around and gave a lot of it back. So clear rotation into what has been working over the course of the last decade, and that is mega cap. And you had new all-time highs for Amazon, new all-time highs for Google, new all-time highs for Microsoft. Apple right there, close to a new all-time high. Yep. Facebook wasn't participating as much, but Facebook had a better run than a lot of the other ones.
Yep.
So, I mean, what everybody was talking about yesterday was Amazon, whether it was the contract that they got, getting shared contract with Microsoft, or, it's just a pure technical breakout, which I tend to lean on too. I mean, we've had basically a year of consolidation here on Amazon between 3,000 and 3,500, and now we are breaking out. Full disclosure, I am long Amazon. It's a big portion of my long-term portfolio. Directly and indirectly, because it's loaded up in obviously the Qs and the other stuff that I own as well. So I'm always happy when Amazon's making new highs. I've said on this show for a long time that I think eventually Amazon's going to see 5,000. I'm not sure if this is the run to 5,000. I think you're going to stall out. Probably. I think it's got 4 on the mind. I would not be surprised if we could see 4,000. Not, I don't know, in short order, but I mean, if we're going up $200 a day, it wouldn't take very long. I'm not sure that's going to continue. 4,000 would be a natural stopping point for it, though.
I think
$300 higher.
I think there's some ransomware in my car because I had a special investment committee meeting on Saturday.
I love
and-
these committee meetings.
No, this was a special one. No, it was actually 4th of July. And I looked at that chart and I'm just like, this thing is going to break out. And I wanted to get in before the breakout. And, Lisa's like, well, it already went from 3,200 to 3,500. And how high could it go? And I said, because I'm thinking stock split. That's what I had on my mind.
That would be a driver to 5,000 if that
Exactly.
happened. I'm not sure if that's going to happen, but
11-month consolidation.
Yeah.
You're building a base there.
yeah.
Earnings, coming around the corner. I think that Barron's goosed it a little bit over the weekend. They did a thing about the transition with the new guy, and they thought, so I'll give Barron's some credit on that. And then I think midday Kramer said something that was mildly positive about it, but I don't know. Now, I mean, it just don't feel like you're going to get a pullback to 30, to the old highs. I mean, it doesn't feel like you're going to get that. So I'm going to have to come up with a new strategy. But I did get a question yesterday, and it might have been in the afternoon chat. Let's just talk to banks for a minute.
Sure.
I mean, let's go JP Morgan, right?
Mhm.
Earnings next week while I'm gone, July 13th. Is this setting up for a pre-earnings run? My answer was yeah, but if you do, it just seems like the banks are out of favor a little bit now. So I don't think you're going to get a rip up to 160 pre-earnings run. How do you feel looking at the chart?
The banks were getting some love because obviously we were anticipating the stress test. We were anticipating some dividend raises. We were anticipating some buybacks. We kind of got that. And I always say stocks want something to look forward to. The problem is the banks are very inversely correlated with the TLT, and the TLT continues to rip. We've seen, the growth tech, the mega tech trade positively correlated with the TLT, and the bank trade is negatively correlated with the TLT. So looking at it from that perspective, TLT has been ripping and running here for the better part of a month, so it's not surprising the bank trade has come off. I have a visitor here this morning, so hanging out here, just hiding in the screen. So we had somebody break into the office here.
Do they want toast? Is that the problem?
I think that's what it is.
You want toast?
Toast.
Make
Visitor.
toast.
We have a visitor.
Make toast now.
You're lucky, man.
Toast. She says toast.
Oh man. I'm
You can hear the
jealous
show.
now.
She says toast. She likes toast.
Okay.
Special
Hey,
guest.
Dennis did her hair this morning. As you can tell.
I'm good at doing hair. I know. Look at the hair. We're very good. Toast, toast, toast. I don't know if you can hear that. She's chanting toast.
Yeah. Hey, man.
Okay. Go tell mommy you want some toast. She runs off.
Don't we know it?
Oh, she's back again.
You got to teach her how to use a toaster, man.
All right, I might have to go make toast here.
Hey,
you're toast.
I am toast.
Hey, he's toast. That's exactly
So, mega cap trade. Going back to that as I get my arm dragged to the toaster. $3,702 here. Amazon. The run does continue here this morning. Lisa is correct. This has been a pretty big run. It's 10% in 3 days. I mean, if you're coming in and buying it now,
I said
it's
it
not
Sunday,
out of the realm
though.
of possibilities. You could get a pullback to the recent resistance area, which is like that 35 to 36.
Yeah, it's never going back there.
It's never ever going back there again. Joel's so upset that he's missed this Amazon thing.
But I thought about it, and I wrote about it.
Go.
I wrote about it in my weekend thing. I thought about it. I wrote about it. I wrote it down, and I'm like, and I also prefaced the thing by I said, when have you seen me super bullish something? Like I was like super bullish. I was like digging my foot into the ground and like snorting while I was driving. But I don't know, man. Well, they'll get a pullback. We'll get a pull, but then I'll come back to 35.50 and I'll be like, oh no, it's a failed breakout. Now I'm hoping they miss earnings is what I want.
Yeah, well, we're away from earnings. When is the earnings date?
Not till July 29th. That's why I wanted to be in it, because I thought, we could get in a good piece and then it would run into earnings. And then if you want to take a little bit off the table, but whatever, we just gotta come up with a new plan here. Just close my eyes and buy it, which I should have done on Friday. But
That's what I'm trying to say. I don't know what just.
I'm back in 1 minute. I got to go find where Mommy is. Obviously, she's distracted.
yeah, whatever. It's
You and Dennis both do this thing where you think, "Oh no, I missed it. Oh, I didn't." Just
do it.
Just do it. Just Nike, man. Just do it.
Okay.
Do it.
All right. Let's a lot of factors here. I don't think people I think the Amazon things here, even though the pandemic is over, it's just so darn convenient,
Yeah.
Seriously. But that's enough of this is not the Amazon show. What do we want to talk? Do we want to get the China stuff out of the way?
Let's stay with tech for a second and just talk NVIDIA here. And
when is the official day on that?
The 20th, right? July
20th.
Yeah, and it's a 1 for 4. I was back.
1 for 4.
Wait, 1 for 4, and it's July
4 for 1.
What are you talking about? What's
it's not a reverse split.
Oh, you're talking the NVIDIA split again?
Yeah, I'm sorry. 4 for 1. You're right.
Has anybody ever said like we're gonna do a 4 for 1, but then they changed their mind to do a 6 for 1 because the stock went up so much?
No, I don't think that's ever happened. But that's funny. That's actually what kind of does happen all the time. They usually go up that much ahead of them. When is the date?
July.
The NVIDIA split.
July 20th.
Oh, it's coming. Okay, but I mean, this has just been an incredible split run from 600 to 800.
Unbelievable.
Unbelievable. I mean, they just love splits. This market loves splits, and it hates reverse splits. Look at AHT. Holy cow.
What did they do yesterday?
They did a reverse split. It was like 3 when we were talking about on the show. Lost another 50 cents. So, oh my goodness, man. They hate reverse splits. So, it's exact opposite trade. Split good, reverse split bad. Wowzers. But
what about GE?
Yeah, I was gonna say GE. It's the end of the
month.
Oh,
that had a bad day yesterday too.
It has been getting love. There's definitely no love there. If they cancel the reverse split, the stock would gap up. I'll tell you that right now. If they said reverse split, we decided against the board. We decided. I guess it's already been approved, but they decided cancel against it. It would gap up $1 on it. So nobody likes getting their shares taken away. And what often happens, people that don't have experience with reverse splits, is you see the stock. So there's people, that obviously on Twitter saying, oh yeah, well, it's just the same, you're just, the stock's going to gap up. The problem is the stock never seems to gap up as much as it should. And then it seems to leak right away too with these reverse splits. So a lot of times if you see, I don't know what the AHT was. Was it 1 for 10 or 10 for 1?
Yep.
1 for 10. So hypothetically, just to say, I don't know the date on it, but I'm not following the story that closely. But let's say hypothetically it's $2.50 when the reverse split hits. Yes, the stock should gap up to $25, and then you're only going to have 10% of the shares. But what often happens is you see it gap up to like 23. It doesn't quite get there, so you get nailed there a little bit. And then what happens is there's people that come in and they start banging out bids again, and you see the thing, start going down like 20 and 19. You see this again and again, reverse splits, and now it's like at $1.90 if you did it post split. That's what typically happens. I'm not going to say it's going to happen with the case of AHT. That's what typically happens is they gap up. They don't gap up as much as they're supposed to the next day. And then they just kind of leak and they slowly leak away again. It's like people just, come in and they sell it. They think the stock's higher. They're going to sell it now. And it doesn't make any sense. But that's what typically happens. So reverse splits are just not fun.
Well, why do you think GE's doing it?
I don't understand. We haven't understood it. They were even Karen Feinerman was saying on Fast Money, when they announced this. Nobody gets it. You do reverse splits for reasons that AHT might do it, where you want to get your stock price higher, back up over the $5. When you get really low, a lot of times they do reverse splits because when the stock falls under $1, it doesn't hit listing requirements anymore. So sometimes you'll see reverse splits just to do that.
But
sometimes there's the death spiral financing if you want to get really fun. Which Jeff Goldman has talked about on her show back in the day.
Tri-ships.
Yeah, like there's death spiral financing where they do the reverse split and then they pop them back up again, and then they finance and they sell more stock, and then they reverse split again, and this process just continues itself, and you get this dry ships chart. I guess it doesn't exist anymore. They're the all-time high is like $10,000 or $100,000.
Yeah.
Reverse split so many times, so it's not fun. Reverse splits are not a good thing. They're never seen well by the market. I'm very surprised. I don't understand why GE is doing it. Maybe they want to think that they're cool and they're going to have a $70, $80 price there again. But I will not be owning GE prior to the reverse split. I love owning other stocks prior to the splits. I don't want to own, just from my experience, quantitative approach to the markets. Typically, you lose money holding stocks prior to reverse splits. You make money holding stocks prior to regular splits. I know fundamentally it's supposed to be the same before and after. It just doesn't work out that way in the real trading world.
Yeah, well, we'll see what bad day yesterday. I mean, I guess it was for GE. I just 1280 stuck out. I know I mentioned that a couple weeks ago. It came down to 1280, bounced, and then revisited, came down again. Ooh, I don't know. You're trading up just a hair. If they make 1320 the wall again here, I don't know. That's come down too many times. Look at this. Even going back into April. 1, 2, 3, 4, 5, 6, 7. Whew. Keep an eye. 1280 GE.
I left there for just a minute. When you went to NVIDIA, did you give your proposal for the new FANG there, Mr. Israel?
I don't want to take ownership of this. It was on Twitter yesterday. I saw it from a couple of people, so no one person. I'm sure somebody thought of this.
Oh, no, you did, Spencer.
Somebody had to have been first, but it wasn't me. But the proposal is we just replace, within FANG, we just replace Netflix with NVIDIA. That's the proposal.
I like that proposal.
I'm throwing out there to the investment committee. Investment committee. Are we replacing Netflix with?
Hold on.
I think that's a good replacement. Replacing Netflix with NVIDIA. So FANG would now be Facebook, Amazon,
Apple,
NVIDIA, Google. Well, the AA FANG has Apple. Right. If you go the AA FANG.
Or no. Actually, it's FanMag, right? It's Facebook.
Oh, Apple. Yeah, they like that in there too.
It's Facebook, Apple, NVIDIA, Microsoft, Amazon, Google.
I'll tell you, did you, Dennis, did you catch any of the afternoon show before I came on yesterday?
No.
Spencer was doing technicals.
Oh,
I had to do a double take because I thought it was me or you.
Stop it.
Mr. Israel's getting these levels figured out.
No, I mean, this guy was like talking to open. He was talking about a 2-day close. Like, this thing isn't going anywhere. I really thought it was Edwards and McGee. I really did. I really did. He is, man. So if he says he made up the new FANG, then, I mean, he's MIP, most improved producer.
There you go. Well, we got him an award. Wait. We love our acronyms on the show.
These guys are smart. Okay.
No. What about AMD? What about
AMD?
AMD?
Not AMD, actually.
Well, it's hanging up out here. We tried to get to 100. I'm long AMD, full disclosure. I rarely buy the bottom, but I basically bought the bottom in those 5 days in May. I don't remember which day it was, but I think I bought this at $73. And I just said to myself I was going to lean on the low. I sold half of the shares around 85, maybe 83, somewhere in there. And then I've kept half of it. So it was a swing trade gone good. This might swing trade. I'm almost tempted to put it into a long-term investment portfolio now. Do you think AMD is going to see $100?
Oh man, I'm dying. I'm dying to see what it did yesterday, because, yep, I gave this level out to the.
Oh, you got a big level.
Yeah, out to the pre-market prep plus peeps. All right, you see. These highs, right? It kind of looks like, there's nothing here, right? You know, look at this. Wow, look at this. But if you go out like this, what do you see?
A lot of resistance, a lot of overhead supply, a lot of people stuck from when they thought it was going to go to 100 the first time.
Yep. And that was a little bit higher. Mm-hmm. So I was off. Yeah. I was like, because when I see three numbers like that and they're far away from 96, I just give like, okay, 3/4. So 95, 75. That would have been where I, would have had the big order out, but it didn't get there. It only got to 95.41, right? So, I mean, there's some big boys. Let's see what happens. But I see those three highs right there like this. And that was just after it came off the old time high, a bad day. And then you had the hiccup and they're like, under 90. Oh, I'm selling it 96. And then it didn't happen. So keep an eye on that. If it could stay up here for another couple days and consolidate, maybe make a close at 95.25, and get a running start in it.
Yeah.
But it just seems like there's some big boys out there at that level.
It's
But I'm
got some
glad it
work to
helped.
do here. I agree. It's not just going to fly to 100. I believe it does have
It's
work
got
to
some
do,
work.
like Joel. It's got some work to do here. We know Amazon worked for a long time there, obviously, for the better part of a year to get through its major resistance. We are back up to the crime scene where, we all thought it was going to hit 100. And we got to 99.23, and then they pulled the rug out from under it. So back to the original place, the crime scene. Can it get to 100 this time? This is a swing trade that has really exceeded my expectations here now. I was risking about $2. That's what I had decided. I was going to let it take out, and I'm up $20 in it. So it's a swing trade that I'm still, like I said, I've sold half of it. I sold half of it, and then I've held on to the other half, but I was like, I could just hold on to this indefinitely here. So you start to get in the comfort zone when you start to get up enough. And sometimes that does happen. Sun Power was like another one for me. It was a swing trade that just exploded so much that I was able to take out my initial cost base and was like, just hold on to the rest of it. So I don't know. I think eventually it does see over 100, but it does have work to do. So I agree with Mr. Elconin.
Yeah, we'll see. I mean, Goldman Sachs always kind of been poo-pooed that stock. But you get a new chip, you get an upgrade.
I just see this running that Nvidia's had, and you think eventually maybe AMD is going to have the catch-up trade too. I mean, they never seem to give Intel love. You still got your Intel?
Yeah, I still got that.
I do too. I'm in a 54. I made some good buys in May because I bought that near the low too, and went to 58. It's kind of 56. I'm up 2 points in it. I don't know. It kind of does nothing. I feel like eventually there's going to be some life here, though. But right now, Intel.
It just seems like they're kind of like the Lordstown of the chip sector.
Whoa!
Yeah.
Where do we got ride?
About to ride it all night. No, it just seems like they just come out with bad news. They get up a little bit. You know what I'll do? I'm just gonna keep an eye on Intel, and I'm not even gonna take this one to the investment committee. If this thing breaks out over 58. Then I'm not going to try and pick. I mean, it looks like a trading range 56, 58, 56, 58. But I think once it clears that 58 for good, then you go up. It's going to fill that gap someday, just under 62. But Spencer, remember that one guy we had on, and he analyzed changes in the C-suite. Remember him? We only had it Colby Howard?
Yeah, that's who it was. Colby Howard.
We should dig him up.
Okay, because that was the day that the Intel.
Yeah, that the guy. Yeah.
Right.
Yep.
Right. Yeah. Okay.
Let's not do it the week I'm gone, but let's get that guy.
Okay.
Let's get that guy on. See what he has to say.
I got some notes. I got to write down on my notes. Colby Howard. Get Colby Howard that down. All right. Can we talk China for a second here? Because with the exception of DD, a lot of these stocks are bouncing this morning. DD got removed from some more stuff overnight.
What happened with DD now?
Taken off the Alipay store and a few other things. There's a bunch of platforms.
They hate DD.
Being
DD should have been doo-doo.
You come up with that yourself, Dennis?
Just popped in my head, but I'm sure it's out there. That looks like a low-hanging fruit one. So I'm sure it's out there. I'm sure I didn't coin that one. That was a low-hanging fruit one. That was this pitch up the middle for everyone on Twitter. There's probably 1,000 people that think they created that. I didn't read it anywhere, but it just popped in my head. So I'm sure it popped in another 1,000 people's heads too. So
yeah, I don't even know what to say on this. 1090 was the pre-market low from yesterday. It didn't get there.
Big level.
What can they do? I mean, I think if there's anything that we've learned from the Alibaba thing is this just doesn't go away. I mean, they're not tomorrow. They
don't bounce back from.
They just don't bounce back, and I don't
regulation.
I don't want to get into a whole, Joe Kernan. Oh, this is the new Cold War, or what's that joker's name? I have CNBC on for like maybe 5 minutes every morning, and then I hear about it, and then I go click. And I just would rather hear silence. But what's his name? Scaramucci.
Yeah, he was on this morning.
He was on this morning, and he said, "Yeah, you know what he said?
No.
He said, "Oh, this just shows that China knows they can't catch up with us technology-wise." And I'm like, "What? Where did he get that from?" I mean, I don't know. It's hard. I mean, you can't take new customers after an IPO. I mean, I don't know.
When you've got the Chinese regulator breathing down your neck, the point you're making is it doesn't seem to go away as easily as it does over in North America. The regulator breathes down the neck. I mean, for crying out loud, you get these antitrust stuff, with Google, and 2-3 years ago, they're not even showing up to the hearings.
Yes.
I mean, there's an empty seat there. They don't even bother. They think they're above the law, which maybe they are in North America, but I tell you, you're not above the law in China. And the regulator starts, doing stuff like this and pulling you from the App Store. You're at the mercy of the regulator. So regulator might come out and say, okay, whatever's happened, we're fine with it. It goes back on the App Store. DD gaps up huge if that happens. I don't know if that's imminent. And I don't know if it's going to get worse. What if they all of a sudden say the people who've downloaded the app now no longer can use it? What happens then? So you're so much regulatory risk. You can't really use technicals on something like this. You can't look at, cash flow projections or anything because we don't know what's going to happen with the regulatory risk. So I'm almost out until I get more clarity on where we're going. It's the same reason I was really nervous about my BABA position back, when it started going down with Jack Ma. I was like, yeah, from a fundamental basis, BABA's dirt cheap. But if they're still out of favor with the regulator, that regulator can do whatever they want over there.
Yeah.
So they can totally control a communist country, much different than a free country.
I like when Matt Hammond was on Power yesterday talking about it because he's our IPO guy, and his point was if you live in a Western democracy, it's hard to comprehend really.
For sure.
If you don't live in a country like China, it's hard to comprehend just how much control the government has, and they get what they want, right? What they want. It happens, right? And if they want to shut you down, they will shut you down. And in this case, they want to rein in the billionaires. There's a handful of them, right? And they're trying
Did you see that stat on billionaires in China? There was some, I don't know if it was true, it was on Twitter, but I was reading it, and it was looking through all the billionaires, numbers. They had them ranked by numbers. And the bottom, so where are they today? And there's billionaires. The bottom 18% are dead. Right. It said dead. I don't know if that's true, but and then there was another 12% that are in jail. I mean, that's scary. I don't know if that's true, but that was flying around on Twitter. So they do not like independent wealth creation. If you're not, you got to let the government participate. I mean, that's a big thing there too, is they want to make the money along with the companies. And when Jack Ma was in good, Alibaba was in good forever in China, and Baba was but now all of a sudden not in as good, and they're not making as much money. And then you look, you've got other companies like Tencent that seem to, go, that are in good. There's definitely some countries that are in good with the government, but it's very important in China to stay in good with the government. And when you're on the outs, it seems hard to get back in. So if Didi's on the outs, it's not probably imminent that they're going to get back in with the government. It's all going to be okay. Not very forgiving. So I'd be scared.
Yeah, it's tough. I mean, it's a tough invest. I mean, when unknowns, I mean, that's the worst thing you can have in a stock is unknowns. But I don't know. It's the bigger picture. I want to just ignore it. And I'm
with you. Bigger picture. I sold my K-Web. I'm done.
It's hard to be an investor in China.
Yeah,
I mean, look at K-Web. There is Baba's cheap on a relative valuation.
I know,
it's dirt cheap, and I kind of want to rebuy the Baba that I just sold at 230. I kind of want to rebuy it at this 209, 210 level. It's natural. You would think it probably is going to bounce in here, and I still own the long-term shares, but the extra shares that I bought. But you look at all, and you just don't know. I mean, I don't know if they're past the regulatory concerns here. They pulled the Ant Financial. They did a lot of stuff to Baba, and I don't know if Baba's back in yet. So it makes me concerned. You can take all the fundamentals you want and look at the valuations and say Didi is cheap relative to Uber and Lyft. Sure. But they pull the app from the App Store, and they're going to stop users from being able to use it. If that's the next step, it could be. I mean, then you got to throw valuation out the window. So it's a scary situation. Maybe it turns around. Maybe they get back in with the regulator, but they need to start kissing up to the regulator over there. That's what they need to do.
Dennis, the ambassador from Canada to China.
I'm not getting invited there anytime soon. After
I don't
comments.
think.
I just heard it was Twitter. I don't know if that was true, But
Yeah, Dennis, that's a pretty big.
I'm not sure if that was
I'll
true.
say,
I have to find it on Twitter. I'll retweet
for
it.
full disclosure, that was Dennis's statement.
When the Chinese government comes in and shuts the show down here for saying that, but
yeah,
just saying, there's it's a different world over there. Not Kansas anymore here, Joel.
When you're dead, I guess. How do you be a billionaire when you're dead?
Man, well, they probably just died of old age.
Oh,
so
yeah,
it's probably
right, yeah.
somebody that's spinning the facts. And they probably maybe they are dead, and they were probably dead because of old age or something, or a natural
let's stop talking about dead.
we're backpedaling here now because we don't want the Chinese regulators shutting down the show.
I don't want to. I don't know.
We're sorry, we didn't mean that. I just was saying what I saw on Twitter. I'm not sure.
Well, then I'm sure it's 100% valid information if you saw it on Twitter.
But the point being, there's a lot of people that, like, here's Popcorn in the chat. Great handle. I won't buy Chinese stocks again. How many people are the same way? I mean Kramer was saying, I'll never buy a Chinese IPO again. He was saying it on CNBC.
That's what Steve, what's his, Grassa said that, right? Didn't he?
I'm hesitant to buy a Chinese IPO. It can have the greatest fundamentals in the world. But, I mean, after this, you're like, well, I kind of feel like I got screwed. And I didn't buy DD. But if you did, you'd be like, I totally got screwed here.
Yeah.
They come out 2 days after the IPO and they hammer it with a bunch of regulatory and removing the app from the App Store.
Yeah.
I mean, why wasn't that done a couple days before? Why wasn't that done before it went public? And there's that full disclosure Chinese government saying we told DD not to go public, that this was coming, and we don't know what the truth is there. We don't know.
We have no way of knowing.
We have no way of knowing. But
okay,
there's a major reason why EEM has massively underperformed the U.S. markets. EEM. Bring up the long-term chart of EEM because it's an important conversation. We might as well go the next 2 minutes on China because we got our guest coming up. But bring up the decade chart of EEM.
Yeah.
We've gone nowhere for a decade. This is one of the greatest bull markets in the U.S. of all time. And if you've been invested in emerging markets for the past decade, there you go. 2008. We never got back to the 2008 highs. Is that right?
The FXI.
Right here. Yep. This is 07.
What is that we're looking at right now? That's the EEM?
That is this EEM. Yeah.
But why does it say $33 over there? I'm confused. Oh, you scrolled further back. Yeah, but
no,
what was 50. The high? What was the high?
That is, I'm still illustrating your point exactly.
Yeah, it's been a very bad place.
The close in October 2007 was 55.73.
A decade later, more than a decade later, you're still down money. And that's been a bad place to invest for a long time. Not just emerging markets a lot, but bring up the FXI. I don't know if FXI was around back then.
I'll tell you, the chart looks identical. It looks identical.
Okay, let me do it.
Bring up the FXI. We're just illustrating a point here. I mean, this doesn't help. If the Chinese government wants to, their markets, this doesn't help because, you need international investors.
This is way below. This hit 70 in 2007. And now 44. It's 44.22.
Yeah. 14 years later. 14 years later, we never even came back to those highs. I know because I have some emerging markets funds, and these things have been dogs for a long time. Every time
S&P
you think, okay, this is the time.
All right, we got our guest coming on. Just one final thing about Chinese
and then we're done.
In this subject.
Yeah.
Okay. Do you know that I've played Lisa like 100 times in Chinese checkers? And I've only beaten her once. She beats me, and sometimes I even do her exact strategies, and I get this big lead, and then I don't know how she does it, but I'm literally one time in 100 beating her, and then I make Dana play, and I can beat her every once in a while.
All right, this is what you do.
She doesn't cheat. I watch her the whole time.
What you do? You say, if I win, we get to do what I want to do in the portfolio, and then you win. That's how you get.
Then she'll let me win. Oh man, I got another portfolio story. I'm too depressed to talk about.
Right. Well,
we're all getting depressed here now.
What? No. Why are we getting depressed? No one's getting depressed.
This is really depressing.
Why is it depressing?
Because she picked a stock, and we have different accounts, and it was supposed to go in like her special pick account, and it went in my account, and it went straight down. Straight down. Like no, like didn't even get to card it up.
You guys got to take this to arbitration or something.
Whatever.
I don't know. Whatever.
I'm just gonna buy more. Whatever.
Okay. All right.
Guest.
Yeah. It's time for our guest.
Save us before
David
China
Green.
shuts us down.
David Green.
We'll let Dave do the talking. So when the regulators come on.
My internet just blipped a bit here, and I was like, "Oh boy,
Well,
I'm in trouble now."
There was a time when we used to have more glitches, and we'd always blame it on China, right? Whenever we would talk smack about them. Anyway, David Green is joining us now. He runs Wall Street Global Trading Academy.com. He live trades at the open for us 3 days a week. David, good morning, sir.
Good morning, guys. Very interesting conversation you guys are having there.
We're getting shut down here, Dave. Benzinga might get shut down.
Do you want to use a
these
different
Chinese
name?
comments.
That's okay. Watch
That is
David
so
come
funny.
on with like a hat and a big nose and everything.
I already got the big nose. I don't think the hat will work.
All right, David. What are you watching today? Because we're lamenting how quiet it is out there. What are you watching today?
Yeah, listen, this is summertime. This is the way it is. It's been this way for weeks already now. I know you guys were talking about Didi. We got in Didi for the first time yesterday.
Really?
Oh, you're into it.
Yes, we're in Didi first time right here around this 1190 level. And of course we'll have a stop order if it goes down from here. But do you guys remember? You guys watch Kramer
All right. Oh yeah.
at all?
Yeah.
I watch them. You know,
Do you
I
know what he
always-
said on? Do you know what he said on this IPO?
Yeah.
I think he
Buy
said
as
go all
much
in.
as you can.
Buy as much as you can.
As much as you can on the opening. That was his exact words. And I don't think he said another word about it since then.
Yeah. He was tweeting about it last night. He did say he got it wrong, but
Apple
he's
did
saying the government screwed him.
Yeah, okay. Apple did a little thing with them. I think they made a small investment or something. Anyway, I think it's fine here at $12. We know our downside, right? We can only lose $12 from here.
Okay,
So
Dave,
am I-
because you're a seasoned trader, you said you would stop out. Where would you stop yourself out on a trade like
I
that?
actually wouldn't. I was just kidding around. I'll add to it and hold on to it. I think it's going to be okay long term. They do this a lot with these Chinese stocks with the regulations, and it ends up not being as big a deal as people think it's going to be.
To get real long.
Great.
The one.
That's what we want to hear.
Yeah.
You guys see Weibo a few days ago, right? They were going public. The stock went from whatever to
Private.
80 private. It went to $81, whatever that was, right?
Yeah.
And then they came out a half hour later and said it may not be true. I mean, trading in this market has become like the wild, wild west again, which we love. I mean, it's the
I
greatest.
think
They
people
actually-
just make crap up. They make stuff up and then it shows up out there. Somehow,
That's it.
like somebody, like it's like it starts. Oh, they could do this, and then somebody overhears something like, "Oh, I heard that they're going to do this," and then it like goes to itself, and all of a sudden, it's an official rumor that gets published by a credible source like Reuters, and then 30 minutes later, it's like, no, it's not happening.
I don't think so. So, one of the things that we have to do is educate people when they see things like this happening. Because how many people got, crushed in that stock? They ran in and bought it up to $80. And I'm seeing that every morning in a lot of different stocks. Marin is a stock that we watch and we trade all day long. The stock is $4, it's $22, it's $27, and it's $12, right?
Wow.
So that's a stock that we watch all the time. One I really like long-term is SoFi. That's one of my favorite longer-term positions.
Yeah.
Which we recently
Kramer gave that love last night. Kramer
Did he
was
really?
giving that love. Yeah,
Oh,
he did.
good.
And it popped up a bit. So it's up a little bit here with the Kramer love this morning. He was saying he liked it too. It's a stock that's been beat up, obviously, near the lows here. Why do you like this one?
Well, I think a big reason why it's been beat up a lot, there are a couple of lockup periods that just ended. I've been in this stock pre-IPO.
Well, it was a SPAC, so it converted.
Correct.
It converted from the SPAC to the company.
Correct. And there was a little lockup period last week, and I still think there's a little more lockup period in it. I just love the story. I think it's a great company. I think they're going to do very well over a long period of time. And look, just because I hate when people pigeonhole people as day traders, right? That's how we make our living, basically. But there are other stocks that I do long-term stuff. I do swing trades, and this happens to be a company that I really like. Again, something you put away. Everybody should have a portion of their portfolio. One for spec stocks, crazy, stupid stuff where you're going to lose, you get involved, and if you hit one or two of them over the course of 5 years, you make all your money back, right?
Right.
We do that in some biotechs. I have a couple of little biotechs right now that I've had for a while. And then you have your investment account, which all should be completely separate. If you're day trading for a living, should be completely separate. as day traders, we look to make a couple of bucks every day that add up to bigger amounts at the end of the day, the week, the month, and the year.
Yeah.
But you got to be aware of everything that's going on. And, it's when stocks get to certain points, that's when I think they're okay. We start buying them, we put them away, and we don't even look at them. We were actually short the market last Friday. And the way we
shorting is evil, David.
If you're not shorting as a trader, you're missing half your trading opportunity.
That's what I say too.
I mean, it's the truth, right?
Yeah.
So we bought a little VIXY last Friday. Just thought the market was getting a little frothy, and we bought it at $28.50. We sold it yesterday at $29.50. So we made $1 on a trade over the weekend, and I'll be looking to get back into that. Quite honestly, if the spiders extend again from here at some point. I think, look, I'm not a doomsayer, right? I'm a trader for the most part.
Yeah.
But I think we're getting a little ahead of ourselves. That's for a trade anyway.
Well, if you look at S&P and you look at the SPY and, trying to break out and, it is at right near an all-time highs. But you look at what's been the driver here. And I mean, it's been Amazon. It's been the big mega caps.
Right.
And you look at other stocks and you're like, wow, this doesn't feel like an all-time high market. It feels like there's a lot of sectors that are really actually not performing well at all. The banks have been hit. Oil got hammered again, or oil was up, but then it got turned around and hit hard yesterday, the oil stocks. And then, so you're seeing certain trades come off substantially here, despite the market indices still holding up. And the big part of that was just Amazon and Apple and Google holding up the markets overall.
Exactly
but
right.
Take those away, it could have been ugly.
Yeah, and the small caps aren't participating, right? They haven't come close to making new highs yet.
Yeah.
So that could be, they're actually down. I mean, that could be a little danger sign also of what's going on. Apple is a stock I've owned since 1986.
Wow, that's a nice
what?
That's a nice position.
I'll tell you a quick story. Right? I started working on the floor of the New York Stock Exchange in 1985 as a squad, and I think I was making about $97 a week, whatever it was. And I got my first bonus, and I think it was like $3,600, and I was rich, right? But I took almost all of it, and I bought Apple stock because I was interested in it. And I think the stock was $6 or $7 at the time. Might have been a little less. I don't remember.
Probably less.
And of course, I bought and sold it over the years, but it's a core position that I will never sell, and I'll leave it to my children because I just love Apple. And anytime you have a big dipsy doodle in that, it's just time to buy.
Well, there was like a 10-year span though when it wasn't so good.
No doubt about it. And
up to 1997, it got down to like $3, and Microsoft actually bailed them out. Really,
that's right.
They had the deal back in '96 or '90s. People forget that Microsoft had eaten Apple's all of its lunch, and Microsoft came to the rescue really in '97, and then since then, obviously, Apple has taken charge. But
I was underwater in the stock. I was losing half of my $3,600 at one point, which was a big deal for me. And quite frankly, the first 6 months of this year, or the last 5, and let me go to a weekly chart. The last, not until recently has this stock started to perform a little better again. As you said, it's been a rotation into all these stocks for the last, 5-6 weeks, and that's what's been driving this market up higher. Exactly what you said.
That's pretty wild. David, you mentioned working on the floor of the NYSE. We always ask floor guys for a story or two, say for work. But if you have like a funny story that sort of epitomizes what it was like back then.
I really is it PG or is it non PG?
Yeah,
where do you guys want to go?
Let's go PG-13.
PG-13, please.
Where do you want to go?
In the middle.
PG-13. Yeah.
Let's put it this way, without getting into any detail. We made the Wolf of Wall Street look like a Boy Scout.
All right.
Back in the day. But when I was a specialist on the floor, so when you're a specialist broker on the floor of the New York Stock Exchange, you basically make the market in all the stocks, and the people who want to buy and sell it bring you your orders. There was no electronics back then. We used to have to actually write every single order in a paper book when somebody gave you an order, and you'd have to write down each order on a paper book. And we used to do a lot of IPOs. And one IPO that we had was Black Entertainment Television. This is 1990. And Robert Johnson was the CEO of BET, but he had some guests on the floor that day. And one of them was Al Sharpton, and one of them was James Brown. So they're at our post, and we're getting ready to open the stock, and we're figuring out the price and everything. And Al Sharpton didn't know anything about stocks or anything else, so he asked me to explain, Dave, how do you guys trade down here? What's going on? I see all fractions and stuff like that. And the only way I could think to equate it to him was, Mr. Sharpton, make believe you have a pizza pie, right? and there's 8 slices in the pizza pie. So each one of those slices is 1/8 of the pizza. And when we get orders in, depending on how big or small the orders are, we tell you what price you're buying it at and whether you're going to get 2 pieces of pizza or 4 pieces of pizza. And he still had no idea what I was talking about. And once we started trading the stock, all of them kind of just stepped back. Their mouths were hanging open. They were like, because the whole process down there, it's like day trading. If you don't know what you're looking at, you have no idea what's going on. None whatsoever. And we used to have, we used to torture people that came down on the floor that were visiting. And everyone used to wear the floor shine shoes back then with the little holes in them. You guys are too young probably to remember that. Okay. So they had the little holes in them. And if you got powder in them, you might as well have thrown the shoes away. And what we would do is, so they'd be standing in front of the post and we pour powder on their shoes. And then every single person on the floor would start stamping their feet on the floor. And you'd hear 1,000 people on the floor of the stock exchange stamping their feet. And the guy would finally look down and he'd see that his shoes were ruined and they were all powdered. That was one of the things we used to do to all people down there. We would put the spurs on people, and then everybody in the room would be going, yee-haw, yee-haw, as the guy was walking around on the floor of the stock exchange. Oh, wow. I have to tell you, it was like, to me, it was like playing in a Super Bowl every single day.
You guys kind of sound like kindergarten compared to what's going on at the CME.
We told him to keep it PG-13. We didn't let him tell the R-rated stuff.
I mean, come on. I was hoping for, that one. I don't even want to bring up that story again.
No, well, I mean, listen, I got into more than one fist fight on the floor.
Oh, okay.
Those are expensive. No. Fights are expensive.
How about $50,000 and a month suspension? And this is way back when. Yes.
Come on, David. Don't mess with David Green.
That was a lot of money way back then. Yeah, because what would happen
you could have put that money in Apple and been like, instead of $3,600, you could have put $50,000 in Apple. You wouldn't even have to do the show right now.
Well, guys, the firm pay the fine, right?
The firm paid the fine. I didn't pay the
fine.
Oh, okay. Well, that's good. Well, that's the first paying the fine. We'd all be in fist fights.
I mean,
Dennis, you wouldn't last a day on the floor, man.
Come on.
You would be like. They would no one would trade with you. They're like, don't trade with that. Don't trade with Triple
right.
D.
I would have got the crap beat out of me.
I had a nice month off. That was a beautiful thing. And we used to, I'll tell you what, I'm one of 4 brothers. There were 4 of us. And we all worked on the floor of the New York Stock Exchange. And it was the first time in the history of the stock exchange that 4 brothers, no experience, nobody got us a job or anything, started as runners, and all became partners of their firm. And at one point, me and my youngest one worked together and my 2 oldest ones worked together. And we were 10 feet apart. We were at one post, they were at another post, and they were right next to us. And we worked together for almost 17 years. And it was the first time it ever happened. But we were self-made guys. One of the things I used to have, too, was there were a lot of, what's the best way I can put this?
In the PG-13.
Well, no, like waspy guys that were born into the business with the Patrick Begley the third, and you know what I'm talking about.
Sure,
right?
sure.
So I always used to hold a can of wasp spray behind my post, and whenever they came in, I'd say, "Oh, here he comes," and I'd spray a little wasp spray on it. They used to have what you call ratings. Right. And your fellow brokers would rate you once a quarter. And depending on the rating you got for your firm, it would impact whether you can get IPOs or not. Because the higher rating you had, the better chance you had of getting an IPO when they got listed on the floor. And we used to have hundreds of IPOs every year. And if you got one of the IPOs, it was like putting a lot of money in your bank. You'd make post commission dollars and be able to trade the stock. And my comment always was, and all my brothers were, I hate him with a passion, but he's one of the best traders I've ever seen on the floor of the New York Stock Exchange. Because we didn't take any shit from everybody. It was business. That's what it was. And it was I'm not going to say it was the one place in the world because there's probably others, but the better you were at your job, the more money you made. That's it. There was no politics. There was no bullshit.
Trading.
Yeah, if you made money for your firm, you moved up the ladder. And if you didn't, you said goodbye. And we had guys coming down with Harvard PhDs and all this other nonsense. Number one, they couldn't take the pressure, right? Because there are times you have 20, 30 guys screaming at you at the same time. And you got to know what all 30 of them are doing because they all have different orders, buy, sell, whatever. It was very fast paced. Math had to be your forte, right? That had to be your forte because at times I'd have 10 guys in a crowd and 10,000 shares or something would trade, and I'd have to divide it up amongst 8 guys evenly. And you had to be able to do it very quickly. So it was 1,600, 1,600, 1,600, 1,600, and you did that all day. Yeah. But you know, the better you are at your job, the more money you made, which was aren't a lot of places like that. You know, there's a lot of politics involved.
What years were you on the NYC floor?
I started 85.
Yeah.
So I'll give you a quick synopsis. Started 85, was a runner on the floor. Got my first job with a firm about a year later, 86. Was there for the crash of 87. I was a clerk for the crash of 87. That was the greatest day of my life. That was so much fun. And the ensuing times after that. But one guy passed away that day, had a heart attack. There were a few other instances where guys passed away, but we were brutal down there. There were times when someone would go down on the floor, immediately they'd have a chalk outline around them while they were laying on the floor. Some of the stuff
this is good. That's tough. That's tough.
99% of them ended up being okay. All right. So 1990, I became a broker. My firm brought me out. They made me a broker. And then for 9 years, I was a specialist broker. And then Goldman Sachs bought our firm for $6.5 billion at the end of 1999. I was with Spear, Leeds, and Kellogg.
You were SLK.
Yes.
We were too. Bright Trading. We were SLK.
Ah, okay. Yeah. So they took us over at the end of 99, beginning of 2000. And we had to work there for 2 years. That was our contract. Most of us didn't anyway, because we really didn't want to be there anymore. And P.S., it was the worst trade Goldman Sachs ever made in their life. They paid $6.5 billion for the specialist firm. Specialist firms basically disappeared within 2 years after that. Yeah. No more commissions, no more IPOs. And Peter Kellogg was one of the smartest men I ever met in my life. His timing was always impeccable. This is the guy who owned one of the principals of Spear, Leeds, and Kellogg. Yeah. And they got out at the exactly right time. Everything went downhill from there. So I started trading on. Give me 1 minute, Spence. Yeah. I started trading on my own after that when I left the floor because I don't know how to do anything else. Right? I barely got out of high school. I didn't go to college. It's the only thing I've ever done my entire life. And I proceeded to lose about $300,000, and I'll say about a month and a half, because this is a trader on the floor, right? I had no idea what I was doing. Okay, I don't have the order flow in my hands anymore. I don't have the buyers on my left and the sellers on my right, and you got to be, quite frankly, if it's impossible not to make money if you have any clue what you're doing. And then I started, doing my technical analysis. It took me about a year to get it back, and I've been trading and teaching people for the last 10 years.
All right. What post were you at? Just curiously,
we were in the garage to start.
Yeah.
Then we were in the main room. I think we were post 5 and 6. They were the biggest specialists by far on the floor in New York.
What stocks did you have?
I traded. Oh God. I had IBM for a long time. I had Best Buy. I had Bank of America.
Yeah,
hundreds over the course of the time I was there.
Yeah, I just because the way it used to work, I started Bright 99, but we trade NYSE. We're sending you all of our orders. It was still we're sending it through execution, but you're physically touching our orders down there back in 99. Are you not on the screen? How? Because it took me 8 seconds to get in. I'm just curious on the other side because I trade IBM in 99 too. So I was definitely sending you some orders probably in 99. We were probably trading with each other in 1999. I send my order. It goes down to the NYSE floor. It takes 8 seconds to get back. What is happening in that 8 seconds? When I send that order to you on the floor, what's going on for that 8 seconds before I get my execution back?
Guys, do you hear this really bad echo we have?
No.
I think we're good.
No, I think
hold on. It might be me, but I don't think so. Give me 1 second.
Okay. In any case, guys, you can see David live on our channel every Monday, Tuesday, Wednesday, 9:25 to about 11 a.m. Right here after this show is done. So that's in about a half hour from now, actually.
Oh, there it goes. It's gone. All right. I'll answer your question real quick.
Yeah, in the 8 seconds, what happened?
All right. In the 8 seconds, either a broker would bring the order to me and say, I want to buy 100 shares of IBM. I tell him who he's buying it from and what price, or it would go in our electronic system and it would pop up on our trading platform as a market order or a limit order, and I would execute it the same way.
You touch a screen to physically execute it?
Once we had the electronic came in right after the crash in 88. So from 88 on, you had a computer screen where you actually touching the screen and executing the orders.
Gotcha.
There we go. This is the guy who's executing your orders, Dennis, all those years.
Correct.
That's it. IBM.
And
I remember trading IBM. I love trading IBM in 99 because $100 stock.
And you paid me for every single order that you did.
Oh yeah, for sure. I'm part of your Apple portfolio. Came directly from me.
Yeah, I mean, real quick, when we started working on the Florida Exchange, we made 3 times as much money on commissions as we did trading.
Oh,
commissions back when we started were like $5 a share.
Yeah.
And people were paying it, they didn't give a shit. All right, go guys.
All right, David,
language.
This is great. We'll get you back. Have more floor stories.
More floor stories. David Green will be live in a half hour. Wall Street Global Trading Academy is his website. David, see you in a half hour.
All right, see you in 30.
All right, that was fun. Let's do some ticker time. We got a question earlier in the chat, a super chat about Apple. We discussed this at the top of the show, but the question was specifically Apple for the rest of the week. I don't know if either of you have thoughts on Apple rest of the week, short term.
It's had a big run, so this is the concern, and you are coming up to the prior resistance point. If Joel goes out to those monthly charts, we're right there, 144.02, I believe. Is that right? 144.04 is the all-time high, so we're right stepping on the all-time high there, bouncing up against it, but we kind of run up into it. So you wonder if it doesn't fail there the first time. So my target would be that 144 all-time high. Can it take that out? But put it in perspective. It's been a big move for Apple. You're chasing it to a certain extent here. If I wasn't long Apple already, I am long in the long-term portfolio. If I wasn't long, I'd be waiting for a pullback to get in now.
Along too, and the all-time high was actually made in January at 145.09.
Where's that in January? I didn't see that.
The first month of the year, right here.
I got 144.04. We got a different price. I have that same one. Anyways.
No,
okay.
I got 145.09.
You have 144.09 too. Okay.
Yeah.
Okay.
Yeah.
Somebody's wrong.
Okay. Here's one we haven't looked at for a little while here. What about Rocket? We haven't talked about Rocket for a little bit. RKT.
I sold it. I just wasn't performing. I sold this when all the meme stocks started going down. I sold anything to do with anything that's memey. So we know that like the meme stocks have started coming down. I know AMC's held up and GameStop. A lot of these other meme stocks have just kind of just been annihilated really. RKT is got the fundamentals. I still like the story here long term. I'm out of it at this time. If it starts to look a little healthy again, I didn't like it was failing around 20. I didn't like some of the other meme stocks started rolling over. The only reason I sold it.
It looks like it looks like you got real good support under 18. I see 4 lows under 18, maybe 1775 to 18 is potential buy area. Rocket.
And then a few people have mentioned Palantir. I do not know why Palantir dipped yesterday after hours. I saw there was
still dipping this morning.
So oh yeah, look at that. It's still down this morning. I didn't see anything on the news front. Let me check on the filing front. There was
the meme stock and Reddit stocks are out of favor right now. I don't know when they come back into favor, but you group them all together. Palantir is a big Reddit stock. It's out of favor right now. Do they come back in favor? Maybe. But they all started breaking about 6 days ago, right at the top with Palantir. And if you're watching that relationship-based trading works, just looking for indications. Why I was nervous about, and I've been nervous about AMC as well. It's held up better than some of the other ones, but a lot of these stocks that have been basically talked up on social media by a lot of people for a long time, and especially on Reddit. A lot of those stocks have come significantly off the highs. So and I don't think it's surprising that you've seen this move into Amazon and Apple as people have been moving out of those small cap. These smaller plays that have, social media pumped to a certain extent. They've been moving into real stocks, and we're moving into Amazons and Apples and Microsofts and Googles and looking for safety to a certain extent in those stocks because some of these other ones have been coming off. I know Wish was another one. They was talked. To everybody's talking that up a lot on social media. That's come off from the highs too. So a lot of these stocks here just you've got to get a turn in that trade. So, those Reddit stocks, you group those together. They kind of all do move together to a certain extent. So keep an eye on that trade. If the Reddit stocks start to give some life, then you maybe see stocks like Palantir and Rocket start to look good again. But right now, those are crowded trades that have been coming off.
We're just been a slow leak while we've been on the show. Pre-market low 25 and a quarter. Kind of looks like we're heading toward that close at 34. So I'm going to hop off. Join me. I can cover a lot of these symbols we missed on Pre-Market Prep Plus. And Spencer, we'll see you at 3:30.
All right, I'm going to bring on a new guest, Callie Cox. She is a senior investment strategist, and Dennis will see you later as well. Callie Cox is a senior investment strategist at Ally Invest, joining us for the very first time on the show. Callie, good morning.
Hey, morning. Excited to be here. Not much to talk about, though.
You are. I need some coffee. Hold on. It's too much energy for this early in the morning. No, was that sarcastic? Because it is, in all seriousness, feeling a little bit slow right now.
Yeah, well, that was a little sarcastic because there are always things to talk about when it comes to these markets. But yeah, it is slow. I mean, it's 3 days after July 4th. So I guess it's to be expected. And, look at markets, they're reflecting the same thing.
So, all right, let me get your overall point of view here, and then we'll dive into specifics. But overall markets, I mean, where are you at right now as far as like how you're thinking about the market? We're at all-time highs. We were talking this morning about the rotation. Big tech looks like it's going. It did nothing for a minute there, but now it's going. Where are you at right now in terms of how you're looking at the overall market?
Yeah, definitely. Well, right now there's a lot going on. There's always a lot going on, a lot to think about. I'm more of a macro expert. I like looking at the big picture. Yeah. So right now I'm looking at earnings growth, economic growth. I mean, we just had a historic quarter in the second quarter. Likely the largest GDP growth we're going to see in decades, likely the largest earning growth we're going to see in decades. So I'm thinking about how to invest past the peak in a business cycle, because I hate to be a downer, but that was probably the peak. And that's not necessarily a bad thing either. I mean, we might see growth trend a little bit down, a little bit closer to average, and that might be a scary thing for investors. It might be a tough thing to digest, but it's not a bad environment to be in. It's almost like a Goldilocks environment where growth isn't too high. You don't have as many worries about runaway inflation, which has been a big worry, this year. But at the same time, I mean, growth's not slipping off a cliff. That's the environment we see going forward. And I think investors are trying to process how to invest in that environment.
I'm glad you brought that up, because a lot of people will look at traditional metrics, forward PE, and see it expanding and be like, how can I justify this to myself, right? So you posed the question there: how do you invest in at the later stages or post peak earnings? How do you do that?
Yeah, well, it's a lot to chew on. We really like looking at growth at a reasonable price. The Wall Street experts call it GARP. I think that's a funny name. But I'll use it because it's shorter. So we like the GARP approach. Look for companies that are posting those consistent earnings growth figures, and you can see them all across all industries. I mean, big tech is one of them, surprisingly. Yeah. The other half of that is obviously you're looking for growth, but you want to find it at a reasonable valuation. And that's where tech is kind of tricky. But I'll add in too that valuations are going to look different in the second half of the year. Why? Because earnings are catching up. I mean, I just told you we had, historic earnings growth in the second quarter, and we're going to see probably double-digit earnings growth in the third and fourth quarters. So those PEs, if you think about, the numerator and the denominator, that E is going to catch up to the P. And I think once that happens, we're going to see, a few opportunities in different industries. Maybe materials, maybe financials. Maybe some opportunities in tech. It'll be all across the board.
Materials and tech have gone right recently, right? The tech's going right now. Materials had that rally around the infrastructure deal announcement. Overall market, I guess obviously from what it sounds like, you're seeing us higher for the rest of the year. Is what it sounds like you're saying.
Well, I'm no fortune teller, Spencer.
Right.
But we are optimistic on stocks through the end of the year. I mean, as long as the economy is still growing, as long as earnings are growing, we expect the market to grow along with that. And I'm not going to say that it's going to be easy, because I mean, we all know it's been a while since we've seen a pullback. We haven't seen a 5% pullback since October. That's historically long. We haven't seen a 10% pullback since the last bear market, the COVID bear market. And historically, that's unusual too. So not going to say
that. I love that. We always freak out whenever there's like a 1 or 2% down day, but here you are dropping numbers on us saying, no, it's actually been like an historically long period of time without a normal 5% correction. So perspective.
Yeah, trying to get that.
It's a beautiful thing. You talked about GARP, growth at a reasonable price. How would you measure that? What numbers do you look at?
Well, going back to what I said, I like looking at earnings growth. So I like looking at individual companies and sector earnings growth compared to the overall index. That could be the S&P, that could be the Russell 3000. It's just depending on what you look at.
Okay, but like as far as the individual companies, you're looking at like PE, price to sales, like all the usual stuff?
Yeah, well, it's going to differ across industry, right? Like financials, it's more price to book. Tech, you might want to look at price to sales because earnings aren't the best indicator of potential.
Okay.
Other industries, you do want to look at the PEs. And I like looking at forwards, forward price to sales, forward price to book, forward PEs, because markets do look in the future.
Okay. You mentioned earnings. We are coming into earnings season, believe it or not, like next week with the banks, and then thereafter with everybody else. I've been reading a lot of upward revisions to earnings, and year over year, it's apples to fish, right? Because you can't really compare to last year, is sort of an anomaly. But the expectations seem to be high for earnings, and you seem to be in that camp as well, where you're bullish, you expect strong earnings growth. I guess the question is, like, how much do you think the market is already acknowledging that this strong expected earnings growth?
Yeah, well, that's a great question, Spencer. By the way, I love the apples to fish analogy. I'm going to use that from now on.
Okay.
That's a really, really good question. And I think in some ways the market has already priced that in. I mean, obviously we've rallied so strongly from the COVID lows.
Right.
And a lot of it has to do with the expectation for future strong growth. I think parts of it they haven't priced. I think parts of it the market hasn't priced in. And I'm going to go back to the rotation here. I mean, the overall market hasn't done much lately. I mean, if you look at the S&P, the line has just been slowly and steadily up and to the right. But we haven't seen that in industries. And, industries, we're going to see some variation in earnings growth, but I think it's safe to say that we're going to see some pretty hefty earnings growth across the board. So we talk about the rotation into big tech. That could be, tech has seen a sell-off lately. That could be an underpricing of earnings growth that we could see. I guess my point is, the overall market might be pricing in earnings growth, the earnings growth that we might see, but individual industries may not be pricing it in as much. And I still believe that we're going to see hefty earnings growth across the board.
And I just want to get your thoughts. Everything we've just talked about has been like a rational market, right? We're talking about earnings growth, fundamental earnings growth as it relates to price, and the market, as we know, is not always rational. It's very, very often irrational, and there are moves that make no sense whatsoever, at least on the surface. What do you make of all of the irrationality? It does seem like this year there is more of that than in prior years, unless you think you don't agree with that statement.
Yeah, definitely, Spencer. Well, markets are always irrational. You've got that right. And we have seen some pretty crazy things this year. I think it's hard to say that sentiment and optimism aren't above average. I mean, there's a lot of confidence and optimism out there. I think it's really hard to measure that right now just because, and I hate the phrase "this time is different," but I do think we're looking at an evolved market here. I mean, I think we really are in unprecedented times, and we're looking at a market that's evolving before our eyes. So I'm hesitant to step out and say, like, wow, sentiment is way too extreme. We're going to see a pullback here, because there are, differences we're seeing between now and then the other, bubbles of optimism we've seen in the past, like the tech bubble, for example. It's hard to say in a bubble if you are in a bubble, but, it looks a little bit different. And these social investing trends that are going on, the meme stock trends, for example, I mean, I think it's a proliferation of social media. We've seen iterations of that. But, I think it seems to be just pulling risk out of the overall market into like other little sub pockets of the market and other markets. So I don't want to say that optimism is going to lead us to that pullback, because right now we're looking at fundamentals, and fundamentals still look very strong. But I guess it's really tough to tell.
So for all the people saying like, oh, this is just a good, this is a short-term trend, where things will go back to relative normal thing the way they were. You're saying no, not so fast due to the fact that we have all these, commission-free retail brokers. The cat's out of the bag now. That things have fundamentally changed.
I think markets are ever evolving, and I think we are seeing some of that evolution right now for sure. Mm-hmm.
And then before I let you go here, I just want to get your thoughts on large cap versus small cap here, and what you're watching as far as that relationship, because every day it does seem like the relationship obviously is always evolving, and for a while there, small caps were just destroying. And I want to get your thoughts on that.
Yeah, so we've seen a lot of, back and forth in terms of leadership, and small caps right now are hard to measure because obviously you have the meme stocks phenomenon going on, and those are mostly in small cap stocks. Right now, small caps and mid caps do still look like they have some legs relative to large caps. And like you said, it's changing all the time. We are seeing that rotation back into large cap tech, but small cap and mid cap earnings potential still looks really good. And we have seen large cap, especially large cap value, run a good way this year. So we see a little bit more potential in small and mid caps, especially if growth remains above average. And it could go down to average for sure. But if growth, comes down a little bit but stays above average, then you might find a little more opportunity in small caps and mid caps. You might just have to dig a little, right?
Since you mentioned the value growth thing, value was back in favor for the first time in, a decade. And it was destroying or was outperforming growth there, and everyone was like, "Oh, is this time? Is value going to finally come back?" And that was a few months ago, and it's cooled off a little bit since then. But I also want your thoughts on that relationship.
Yeah, definitely. Well, you're right. It's been a tug of war again between value and growth, and we saw value really take the lead in the beginning of this year.
Yeah.
But like I said, we also had a historic first and second, especially second quarter. And typically you do see value stocks do better when the economy is growing, because value stocks tend to appreciate with current performance versus future potential. So that wasn't as big of a surprise to us. I think the timing of it was a little surprising because, of course, things were changing so quickly. But typically you do see value perform better in the early stages of an economic recovery. In terms of is value going to do better going forward relative to growth, it's really hard to tell. I mean, obviously you're seeing growth get a bit here, and if bond yields stay low, if the expectation of growth slows as we expect it to, then maybe we see growth take the lead for a little bit. But I think the most important thing to focus on, especially for individual investors, is having a little bit of both in your portfolio. I don't want to be the classic strategist who says diversify. But it's so important right now, especially when there's so much uncertainty out there. And we're not quite sure exactly what the economy will look like in the next year. I mean, we can all make our guesses. We can all look at data. But, to truly hedge yourself and to truly make sure your portfolio is ready, just have a little bit of everything.
All right. And this is really my last one now, I swear. But I like what you – I've been reading your stuff. I like what you say about, now being – the best time to invest, is always now, right? And I completely agree with that. So I'm going to give you the floor here. Make the case to anyone out there watching and listening, whatever, who's like hesitant, and there's all these risk factors, whatever, all these reasons why you shouldn't invest and shouldn't buy whatever it is you want to buy. Make your case now as to why now is the best time.
All right. Well, first of all, invest as early as you can. I know everybody says that, but compounding, if you're a long-term investor, compounding is so powerful. And that's just the mathematical phenomenon where gains, compound on top of gains. It's exponential growth. But, it really is in your best interest to start investing now, even if it's a little bit at a time. I mean, of course, your money, if you have debt, if you have to build up your savings, of course, your money you could get more bang for your buck elsewhere, but invest just a little bit. And, even if you're nervous to invest, because here at Ally, I mean, we see a lot of signs of people, not feeling confident. We have the education out there, but they say, I don't feel like I have enough mojo to really step in there and get it done. Read up on things, try to educate yourself and, test it out a little bit. Just go in there and buy a stock here and there, see what happens. And if what happens is a tough lesson, if it sells off, then look, you just overcame that barrier. So I know it's tough, but investing is key to building wealth. So invest as soon as you can, and kind of dip your toes in the market a little bit. It's totally okay.
I totally agree. It's the eighth wonder of the world, right? Compounding. Callie Cox is a senior investment strategist at Outline Invest. Won't hold it against her that she went to UNC. Callie, we would have loved to. Well, I went to Maryland, so
Oh, a little bit of ACC action.
A little bit of anyway. Would love to have you back on. A pleasure. You can read her at Outline Invest. And Callie, it's been a pleasure to have you on. Thanks a lot.
Yeah, thanks for having me.
All right. It is 9:15, guys. That's going to be just about do it for today's show. I'm going to wrap it up here in a few and transition over to David Green, live trading the open in about 10 minutes or so. So some other things we didn't get to. First off, I have not said this enough today, but smash that like button, please, and thank you. I don't know how many likes we're at, but I'm sure it's not enough. It's never enough. Guys, the likes are how I eat, okay? Feed me. Feed the likes. All right? That's the first thing I want to say. And actually, I'm going to look up how many likes we're at right now because Mitch was telling me that we're not there yet. We're not where we want to be on the like for 365. Oh, you're killing me, Small. It's killing me. Okay.
You might just have to hold off Callie next time because that was a great interview there. We got to get some more likes for that.
Get us some likes for Callie. Get us some likes for David. Get us some likes for Joel, for Dennis. Guys, we are coming into, we are in the summer doldrums, right? We are squarely there in the summer doldrums. It's going to be slow like this for another week or so. And then we'll get the bank earnings, and then we'll get to earnings season, and then it'll be better from there. And also like the fact that, hey, we're all here, right? There's going to be some days coming up soon where Dennis and Joel are going out of town, and there's going to be days where it's just Joel and I, or just Dennis and I, right? So enjoy the fact that we have the whole crew together here because we're getting into the summer months here, and people are going away. Some other things we didn't get to in chat. We did not talk about Ford. I saw someone talking about in the Benzinga.com chat. Ford. I saw they had some semi news yesterday, and it sold off a little bit there. Let me pull up a chart on Ford so we can look at this together. I do have my eye on it ever since I, thank you very much, Media Horde. Where's my Ford chart? There we go. Bada bing, bada boom. Ford. There we go. Okay. Off the highs. Look at that. What, the descending triangle, wedge, whatever you want to call that, right? Triple bottom, whatever you want to. It's an interesting setup there in Ford on the weekly. We did not talk about S. I've had this one on my radar as well. It IPO'd last week. Oh my goodness. I thought about buying it last week and didn't. Also thought about buying LegalZoom last week. I'm still thinking about buying it. And those are two that I have on my shopping list as well. What else did we miss? I think that was kind of it. There really was not a lot of news today, guys. It was super here. Let me just go into some ratings. Always want to have that just because you never know when a rating is going to move a stock. So this morning, what is of interest? Boston Beer, ticker SAM, getting an upgrade at Credit Suisse to outperform. We have, that's kind of it. That interests me. The rest of these are all boring. Yeah, and like smaller firms. What about downgrades? Nintendo downgrades a neutral at Jefferies is interesting. It trades on the OTC market, so not super liquid here in the U.S. Alkaline Water downgraded Canaccord to sell. No, man, there's just nothing. We got, I like this. Jefferies initiating some of the larger MSOs at buy. I like it. They're initiating TerraSend, Trulieve, Green Thumb, and Cresco at a buy this morning. Owen Bennett, yes. Love it. You'll love to see it. Oh, and Air Wellness. You'll love to see it. Jefferies bullish on and Columbia Care. Oh my God. We can sort by analyst firm here. Let's do it that way. Air, Cresco, Green Thumb, Trulieve, TerraSend, all upgraded or all initiated, excuse me, this morning at Jeffries at a buy rating. Love to see it. Bullish led space. You guys know it. And okay, let me just catch up on chat. No, okay. Yes, I got my Airbnb. On, I think it was Friday. It may have been Thursday. I don't remember anymore. Pretty sure it's Friday. Got my Airbnb. No, I do not have a target on the downside or the upside. General plan, is this is one I don't have a super high tolerance for pain in this, so I don't have any stops in place, but if it were to fall, 5-10%, I would strongly consider getting out, but I do not have any stops or targets at the moment. It's just one that I'm sort of watching closely throughout the day. Yeah, I am long and strong. A bunch of those MSOs, guys, a bunch of those cannabis plays, continuing to be long and strong. Okay, that's going to be a wrap for me here today. Here's a quick preview of what is to come on the stream. We got David Green up next. We got SPACs Attack after David Green at 11 o'clock. They're talking to this founder and CEO of the Boxed Company at 11:15. We've got the Power Hour at noon. They're talking to Will Libby from upper90.io. No get technical today, but we've got 2 whole hours of Moon or Bust. The show about altcoins and DeFi is going from 1 to 3 today. If you missed the show on Friday, we talked to one of the people behind Shiba Inu, and it was one of our most watched shows in quite some time, actually. So go to our YouTube channel. You know what? I'll even show you how to do it. You go to, let me share my screen here. You go to youtube.com/Benzinga TV. You go to playlists. You can go to Moon or Bust, which is where? There it is. View full playlist. Boom. Shiba Inu. The top one right there. The most watched Moon or Bust show we've ever done. Highly recommend. This show will air live today, as I said, from 1 to 3 o'clock. We've got the first trade show at 3, the At the Close show with Joel and I at 3:30, How to Use Benzinga Pro with Mike Rao at 4, and we'll wrap up the day with the Aftermarket Therapy with Stock Mom at 7 o'clock Eastern Time. All right, we are almost up to 500. Can we get to 500 on the legs, guys? That would make my morning. Looking at my movers tool, gosh, nothing of interest, guys. Nothing of interest on the movers today, up or down. I mentioned that alkaline water downgrade, WTER, so that's down 13% on a downgrade. On a downgrade, it's down 13%. That's interesting.
I got a couple names here for you, Spencer, to keep on watch.
Sure.
We had NEGG that we talked about last week on Money Mitch before this big rip.
Crazy.
But definitely watch JON today. That was an interesting one. It's a kind of relatively newer stock.
Also, JON?
Yeah, Joan, the kind of specialty realtor, kind of like a Michaels. Also, you got Stitch Fix in that same kind of sector. We've had a lot of these names kind of rip off, so I'm keeping an eye on that. Wayfair starting to find a bottom also, so keep your eyes on Wayfair. And just to put out some different types of plays, I want to give out some infrastructure looks that I'm looking at. CWCO, and then also another water play, PCYO. So I'm going to keep that one also on watch. PCYO is kind of more of the favorite one for me, but just another one to mention there, CYWO.
All right. Since we're talking infrastructure, I should mention that I own a small cap infrastructure ETF. I own PSCI is the small.
Interesting. I'm going to take a look at that today, Spencer. Thank you for letting me know about that.
Industrials, not super liquid. but just is one that I own. Yeah. Wait, what was that? What was JON, Mitch? I don't.
JON. Look it up.
JON. That's not a. It's not a.
JON should be.
JON.
Do we not have it? I might be.
I've never even heard of JON.
Yeah, I mean,
no,
it's there.
No, it's not.
All right, I'll show you it then.
Wait. Is it JOAN? Is that the ticker? What?
Yeah, JOAN.
JOAN.
There you go. There you go. There you go. That's
okay.
why. That's why I had it wrong.
Okay. All right.
I had it written down right. I just didn't tell you it right.
All right.
You know how that goes.
All right.
I think I might need another coffee to start the morning.
Maybe. All right. Go get that coffee. I will as well. We are just about at 500 likes. Guys, please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. It is 9:25, which means it's time for David Green. This stream will end. It will redirect straight to David, and we'll see you there. Everyone have a good rest of your day. Good luck at the open.